Good morning, everyone. This is Carl Griffith from Graybar, and I want to welcome you to our G2 Talk webinar series. Today we're going to talk about financing for data centers, and we're glad to have you on board. Before we get started, I'd like to give you a little bit of information about Graybar. This particular seminar and others in the G2 Talk series are all about and PowerSmart is Graybar's program to help customers that are responsible for facilities with energy saving and intelligent solutions for their facilities. And in this particular case, the facility is a data center. Before we get going, I just want to have a couple of reminders, some information for you that will be helpful through this seminar. Number one is this seminar will be archived, so if you would like to review it later or share it with an archive, you can go up to graybar.com. You can click the G2 Talk webinar logo, and it'll direct you to the archive. We will also have a white paper and a case study posted up there, so if you'd like some additional information about our topic today, you can get it right there at the archive. We will answer your questions, so this is somewhat interactive, so there's a Q&A button on the bottom of your screen. If you'll press that button, a dialog box will open, and then you can type in your question. Those questions are archived on our end, and near the end of the webinar today, we will address those questions live online. So we look forward to those questions. So if you have one as we're going through the seminar, please click the Q&A button and type your question in there. The first 50 people that signed up for the webinar today will receive and join us online, will receive a certificate for a cup of coffee from a major coffee vendor in the United States. And so grab a hold of that email if you're lucky enough to be one of the recipients of that, and take it to your local national coffee store to get a cup of coffee, and that's our gift to you for joining us today. Our presenter today is Jason Miles. Jason Miles is a 17-year employee of Graybar, works for our division called Graybar Financial Services, sometimes known as GFS. Jason's a graduate of Truman State University right here in the wonderful state of Missouri, and he lives here in St. Louis, the home of the Cardinals and the Blues, and so we're glad to have Jason with us. He's an expert when it comes to equipment financing. He's had various responsibilities within the Graybar Financial Services organization, including business development. He travels around the country, talks to people about financing, and is involved with some of the largest projects in the millions of dollars worth of financing that we do annually. Jason is involved in those. So we're just really tickled to have Jason with us today. So without any further hold-ups in Jason's presentation, I'd like to pass the baton over to Jason. Thank you very much for joining us, Jason.
Thanks a lot, Carl. I appreciate it. And I want to thank everybody for taking the time out of their busy days to be on the call and learn about creative financing for data centers. So we want to stick to the creative financing for data centers, but we want to also open it up to the fact that we can finance multiple projects. So it's not specifically just about data center financing. We're going to open it up to be a general conversation too. So feel free to ask questions throughout the process. I don't want to bore you with too many details, so at any point in time, ask questions, and we'll see how this goes. To start with, I'd like to go through what GFS does, what Graybar Financial Services does. We're a financing solution, or the equipment financing solution for Graybar Electric Company. We facilitate equipment leasing and project financing for both commercial and government customers. So we deal with both the private and the public marketplace, and we can finance a wide range of projects, like I said. We don't just do equipment leasing either, just so you know that. We do other types of financing also. And I'll go into more detail later on in the presentation about the types of financing that we do.
So Jason, this is Carl, just to ask a question here. You can bundle equipment along with the installation and the labor and maintenance and put it into a single lease or a single funding vehicle? Is that how that works?
Yeah, that's correct, Carl. I mean, we do 100% project financing. So we can finance everything, including the installation, the labor, the maintenance, pretty much so whatever is encapsulated into that project, we can finance.
And it's bundled with the equipment?
That is correct.
All right, great. Thank you.
So I wanted to go through a few reasons why you guys might finance equipment, why you guys might consider financing an equipment acquisition. I'm sure you guys have run across many of these things over your careers, and the first and foremost is the ability to overcome budgetary constraints is one of the reasons why people do equipment leasing the majority of the time. Everybody on this call, I'm sure, has some sort of budget, and we all have to deal with that budget. Equipment financing can alleviate some of those budgetary pains on an annual basis by spreading the amount of the cost of the transaction over a term, over a longer term, anywhere from, let's say, 12 months to 10 years, in some cases longer. So first and foremost, what equipment financing does is overcome those budgetary constraints. We're really looking also to help you conserve your working capital. So not just overcoming budgetary constraints, but conserving the capital that you have to utilize in other aspects of your business. So I'm sure everybody wants to use their money appropriately and use it for the best offerings or the best things that they can do for their company. And by utilizing third-party equipment financing, that gives you some freedom to work with that working capital that you have to run your everyday business. Obviously, one of the key benefits of financing is no upfront costs. So instead of putting out that initial capital expenditure of a $100,000 lighting retrofit project, you can from day one start making monthly payments. So and be cash flow positive. And that cash flow positive is key when it comes to energy efficiency types of projects. So if it's a data center that's dealing with HVAC and lighting, or if it's an end-user customer dealing with a lighting project or an energy efficiency project, what we try to do at Graybar Financial Services is make that monthly payment smaller than the monthly savings. And what we create here is a positive cash flow from day one. So instead of putting out, that $100,000 of initial capital expenditure on day one, you might be saving $300-400 on day one, and we can make that a positive cash flow experience. In certain cases, we're going to be able to do leases for technology materials. Let's use like Brocade or some networking equipment that you might be putting within your facility that has a future value to it. We might be able to protect against technology obsolescence in those cases, where you can finance a good, and at the end of the term, the type of lease that we would structure for you would allow you to return that material or upgrade that material. And that's key. That gives you the ability to run your business efficiently with the best technology that's currently in the marketplace. Another aspect of what we do is we offer a simple credit line for you that allows you to do add-ons throughout the process. So we are talking about 100% project financing. We're talking about specific projects, but throughout your years, your annual expenditures, I'm sure you're going to have projects that arise that are not all going to be at the same time. So we can do continuous add-ons for our financing customers and allow them to set up things like master leases, which allows you to set up schedules. So you might do a project in February, and then you might have a project or a piece of equipment that you need to purchase in December, and we would be able to add that on to your existing financing transaction.
Seems to me this would be a good option for technology upgrades.
Oh, for sure.
You buy some kind of equipment, and there's a technology upgrade, and so you want to upgrade it so that you have the most up-to-date equipment with all the software that's required, et cetera, that you could just add that right onto the lease, right? It just goes on and continues with this kind of option?
That is correct.
All right, great.
That is correct.
Thank you.
So all of these things, are flexibility. It gives you flexibility. It gives you flexibility to what Carl just said, to protect against technology obsolescence, to also, to have options at the end of the term, to be able to upgrade, to be able to utilize your capital for other things if you need to. So this flexibility is what's key when it comes to why you would want to use equipment financing to purchase your goods. There's also possible tax benefits with certain types of leases. So in certain circumstances, you're going to be able to, instead of putting an asset onto your balance sheet and depreciating that asset and paying taxes on that depreciating asset, you'd be able to put it on your operating statement. And what this does is it allows you to write it off almost like a rental expense so that you don't have to pay taxes on that depreciating asset. That can be very beneficial when you're dealing with your Treasury Department and you're trying to get approval for these types of purchases, and it can allow you to maybe move forward with transactions that you wouldn't have been able to before. With equipment financing, what we're doing is we're locking in a term for you. So you're locked in for, let's say, 24 to 36 months or maybe out to 5 years. And what by locked in, I mean you're locked into the interest rate. And we're currently in an environment where interest rates are very low. So that's beneficial. In the future, interest rates are probably going to fluctuate up because we're pretty much so at the bottom. So when you're dealing with equipment financing, you're tied in and you're locking into that rate. Now, when you're dealing with a bank line of credit, those rates are often tied to some sort of indicative rate, like a prime rate, that will fluctuate with interest rate fluctuations. And that could cause the cost of your equipment purchase to go up if you're utilizing bank lines of credit. And that's the reduced interest rate fluctuation that I'm speaking about here. And overall, we consider ourselves easy to use. And that's the most important aspect of it. You have a lot of choices. Your companies have a lot of choices when it comes to equipment financing. And what Graybar Financial Services tries to provide is the ease of use to allow your company to get an equipment lease, go forth with a project without all the hassles that you might have to deal with in other marketplaces. So I want to go through how GFS works, how we work on an everyday basis, what we do. Graybar Financial Services is a multi-funding source solution. So we're a solution that provides you the ability to utilize multiple financing sources. Graybar Electric, as a Fortune 500 company, has multiple banking relationships, and we utilize these low cost of funds to be able to pass through to our customer. And rates, it makes the rates lower, and that's going to be key for all financial transactions. It's a commodity product, and what we're doing here is we're trying to provide the best service and the best rates in the marketplace. And with this model, with the ability to go out to multi-funding sources, to multiple banks, to multiple finance companies, we have a very high approval ratio because we're often able to find a source that would be interested in your types of credits. And when I say your types of credits, I mean everybody's types of credits, because everybody on this call has a different credit profile and a different company structure. So all of that can be taken into account, and we can help facilitate financing and find a partner that would be interested in your types of credit. We consider ourselves an equipment generalist, and I'll go through that in the next slides. But when I say equipment generalist, we're willing to finance a multitude of different types of projects. And I'll mention them later on, and I'll go through the list of projects. But as a generalist, this gives your company the ability to not just finance, we're not just financing one aspect of your business. We can finance a lot of what your projects might entail. I hit on ease of use again in this slide, and I think it's important to reiterate the fact that we're easy to use, and that's the key. We want you to be able to call us, and we want to be able to facilitate that financing for your companies and make it very simple process. We want to make it definitely financing simplified, no doubt about it. And that goes along with the flexibility that this multi-funding source solution gives us. It gives us a combination of different aspects that you might might not be able to deal with when you're dealing with a single source. We can get a quick approval. That is important. We can get lease paperwork that is not as cumbersome as what you might be dealing with a bank or a local bank. We're going to make it very simple. We're going to make it something that can be emailed back and forth. In today's technology, we're going to make it as simple as a process as possible. And overall, we're going to be able to find a source that's maybe not as stringent on credit criteria. So if there's companies out there that are, let's say less than 10 years in business and, are looking for financing and might not be the best credit profile, we have sources that are interested in that type of credit also. So we're willing to work with a wide range of customers. We customize programs. So with customizable programs, what we're trying to do here is we're trying to give you the ability to finance your goods in the way that you want to. We often work with traditional capital leases, and that's a dollar buyout lease, it's what it's referred to often. And what that does is you're financing the materials over the term of the transaction, and then your company takes ownership of them. And that's the majority of the business that we do. It's like a traditional loan, but we do lock in the rate for you, and we do give you the ability to own the equipment at the end. We're also working on different programs like service agreements, and we'll finance all parts of the sale. We're going to finance the maintenance and the service that are included in it also. And this gives you the ability to, unlike a bank, we're going to be able to finance collateral that's not necessarily what a bank would be interested in. A bank's going to be interested in very hard collateral, and we'll finance often, soft pieces of the project, like service, like maintenance, and this can be very beneficial to your company.
Would one of those soft things maybe be the wire in the walls?
Oh, definitely. And when you really think about it, the light bulbs in the ceiling too. So, all of those things are going to be things that are going to be what a bank would consider soft, and what might be harder to get financed through a traditional banking source. And including that, we can do, if there's an audit that needs to take place before you do your project, we can finance that aspect of it also. And here's basically a list of everything we can do. We can do everything from power distribution to lighting to communications, data networking, software, cooling systems, HVAC systems, security. I hit on lighting again. I like to hit that twice. I think that's a big thing, and it creates a savings for you from day one often. And I think it's good to highlight it multiple times. Automation, and we can also do tools and test equipment. So we can do a wide range of equipment.
So this is interesting. You talk about cooling as one of the things that can be financed. So if a data center operator wanted to move to maybe a contained solution where we have a row and we contain the ends and seal it up so we keep the cool air and the hot air from mixing with each other, and it's all engineered with cabinets and power distribution, etc. You can do that whole thing from soup to nuts. The installation, the warranty associated with it, etc. Correct?
Correct.
And
correct.
you have experience doing those kinds of things?
Yes, we definitely have. And I'll show that in the next few slides. I'll go through a few case studies for you and go through some of the aspects of what we can do. And that's key. We're going to finance 100% of the project. A lot of people say my company has all the money in the world, and we purchase everything, and we don't have to worry about this. In reality, if you look at some statistics, 8 out of 10 companies finance basically an equipment acquisition on an annual basis. The laptops that Carl and I are using to give this presentation are financed by Graybar Electric. Often, multiple aspects of what are happening within your company are financed. So keep it in mind. It's something that can be utilized to help you get past those budgetary constraints and to get a project done. And I think that's key. I think you have to look for alternative ways to get things done within this, within your businesses. And I think it's important to keep your mind open to making sure that there's, other ways to move forward with projects. Rates are always important, and especially when you're talking to a treasurer or controller of a company. And we offer very competitive rates. I put this sheet on there, and it's more just to highlight and give you an example of what we do. And in this case, it's what I talked about, a capital lease. And as you can see, our rates are in the 4% range for transactions, for $350,000 transactions. And you'll see that example What we're doing here is we're taking a rate factor, a rate factor, a lease rate factor, multiplying it by $350,000, which is the project cost, which might include everything, like we said, from installation to equipment to service. And we're putting that into a single monthly payment for you. So instead of putting out that $350,000 of initial capital expenditure, you can start making monthly payments of $6,531 on a 5-year basis, on a 5-year term. And we're doing this with no advance payments, and we're doing it with a very easy application and documentation process. And I wanted to show you also a cash flow analysis and give you kind of an in-detailed analysis of how we're working with lighting retrofit transactions. As you can see in this scenario, I believe we have a $100,000 or $100,000 project investment here. The total project investment is $130,000. So the total project cost for you as a customer would be $130,000. And let's say this is just the lighting for your overall facility, changing out the lamps and ballasts for your overall facility. Let's say your local utility is going to throw you in a rebate here, and that's $30,000. What we're going to do is we're going to finance it one of two ways. We're going to finance it as $100,000, the amount less the rebate, and you can collect that rebate and do with it as you choose. Or you can finance that $130,000 and do the same thing, so encompass that rebate and then be able to purchase other materials with that rebate instead of and by financing the whole thing. So this gives you the ability, if you see, to finance $100,000 or $130,000. In this scenario, we're going to finance $100,000. You're financing $100,000. You're going to take the rebate and you're going to buy down the amount of the investment, so you're not financing the total $130,000 portion. And you'll see that Graybar has already walked in with one of our contractors, and we've done an audit. And that audit on your facility shows an annual cost savings for you of $45,000. So we're going through this audit process. We've realized that you get a rebate of $30,000. We realized that you can save $45,000 a year on an annual basis. Now we're trying to figure out how are you going to pay for it. And that can be often the biggest hurdle, right? So what we're trying to do here is we're going to try to show your treasurer, your controller, the person making the money decisions, that we can make this transaction cash flow positive from day one. And you'll see at that 36-month term, the monthly project savings of $3,750 is more than the monthly lease payment. And what this does is it gives you positive cash flow of $662. So instead of putting out $130,000 on day one, you're saving actually $662 from day one. And that can be a very positive thing for your company, obviously. And it's also a very easy way for you to take this project to the people that are making the financial decisions on how they're going to pay for these things, these projects, and to get it to move forward, actually, instead of just sitting on the other proposals that you have on your desk. It's actually a project that will be able to move forward this year. So, I've gone through what we do. I've gone through the aspects of financing that we offer. I want to go through a few case studies, though. I want to go through a few testimonials of customers within your market that have actually used us. A good one, I think, to start with is a company by the name of Wilcon, IX2 Wilshire, out in the LA marketplace. I think they're in downtown LA, and they have they're a co-location that has a lot of fiber running into their building, and they have the ability to offer their customers a great co-location and a great facility to access data. So what Wilcon needed some brocade equipment, and Graybar was there to offer them the brocade equipment, and we sold the brocade equipment to them, but they were looking for an alternative way to pay for it. So we came up with a financing method that allowed them to finance the brocade material and on a lease-to-own payment plan. So it was a dollar buyout lease, and it allowed the customer to purchase the brocade MLX routers and ICX switches over a 36-month term freed them up to, utilize their working capital for other purchases and other things that they needed to do to run their business. And, the value to Wilcon is utilizing the new Brocade system to provide a layer 2 service from one platform, which enabled them to offer service provided level Ethernet. And by financing the purchase with GFS, the customer expanded, we expanded the customer's base and we expanded the customer's offering. So it was kind of a win-win. We had the ability for Wilcon to finance the project, and then they utilized that material that they were financing at a very discounted rate to expand their business. And that's what financing can do for you. I'll go through a few more testimonials. I really think that the Wilcon case study is a good example of what the combination of Graybar Electric and Graybar Financial Services can do, though. Carl, I think that, if we have the Graybar reps out there that are offering materials like Brocade, materials that are going to go into a data center or into an end user, and we give them the ability to finance it, this is something that can be very beneficial for everybody's company. I'd like to go through, just a few testimonials. I'm tapping myself on the back here, but in the case of Wilcon here, we have Reginald Scales, and Reginald was awesome to work with. He's the VP of Sales and Marketing for Wilcon, and basically, he said this purchase of the product we needed and the price that we could afford is what GFS allowed them to do. And I think that kind of hits it in a nutshell. We allowed them to purchase a product at a price that they could afford to expand their customer base and expand their service offering. Hostime's another great company that we've worked with in the data center market, and they're down in the Florida area, and they're a good partner. And both of these companies, Hostime and Wilcon, didn't just use us for one project, they used us for multiple projects. So they came back to us. We were able to secure a credit line for them that allowed them to continue financing materials. Even to today, we're still working with these companies in financing the materials that that they're putting in their businesses. And as you can see through these testimonials, and Hostime, they're extremely satisfied with the partnership with Graybar over the last few years, and that's over the last few years, obviously. And the solutions that are provided by Graybar, we're able to, to give them the ability to acquire equipment at a rapid growth with fantastic service. So I'm sure a lot of your companies out there that are that are growing at a very high speed, you're looking for ways to purchase goods. Financing can be key to that. And third-party financing through Graybar Financial Services, I think, is definitely one of the best offers out there in the marketplace. Here's a good testimonial from one of our contractors. So not from an end user customer, but from a contractor that actually uses us on a day-to-day basis to get their customers financed. Brian with Interface, he sells a lot of small NEC phone systems, but he knows that he can come to us because we're dedicated to our sales and our service. And, that's important. GFS is dedicated to servicing both our contractor customers and our end user customers. So I want to thank you guys for your time. I want to also let you know that we're gonna follow up this with additional contact information about Graybar Financial Services, so that you can come back to us if you need equipment financing. If you want to discuss it further, we're more than available. My group here in St. Louis is more than available at any point in time to discuss financing with you, and help you get that next project financed. So with that contact information, we'll also include a case study, and this case study will give you the ability to go through the processes that we did for Wilcon, for IX2 Wilshire, and it'll give you kind of an idea of what we do. So I appreciate your time again, and I'd really like to hear from you if you guys have any questions.
Thank you, Jason. We do have some questions, and I'd like to, maybe we can start going through that. Todd had a great question here. And it says, what happens to the equipment at the end of the lease? When this question came in, we were talking about a contained solution in a data center. You've talked about lighting, but then you've also talked about equipment like telephone systems or maybe Brocade switches. So I'm assuming the answer to this depends upon how the lease is constructed. So I'm sure somebody that's putting in a lighting system doesn't want you to come in and take all the lighting out when the lease is done. But maybe if you're leasing Brocade switches, for example, maybe they do go away at the end of the lease. So can you kind of clarify the lease construction and how this happens at the end of the lease, what the terms are about the equipment, who owns it?
Sure, Carl. We do, like I said during the presentation, we do one of two leasing methods, a fair market value lease or a capital lease. The fair market value lease is going to put a residual or a future value on the materials. Now, some collateral we're going to be able to do that with, right? You mentioned Brocade networking equipment. We could definitely put a future value on that collateral. A little harder to put future value onto a lighting system because we're not going to come back in, like you said, and take those lamps and ballasts out. But with the Brocade system, we're going to give the customer an option at the end. We're going to give them the option that they can purchase the materials, they can continue to finance the materials from us, or they can return the materials back to us.
So you could construct a lease for 5 years, the option comes up on the end to buy, and then you can continue the financing if you choose to do so.
Correct.
All right.
Correct. Or you can return the materials and get something else.
All right.
Yeah. And, that brings up a good point, too, though, about the method of financing that we do. It's not really dependent on the collateral. It's more credit-based. So this gives you a lot of options when it comes to the types of projects that we can finance. So it doesn't have to be based on just hard collateral. It can be based off of the credit of your business that will allow you to do soft cost projects like lighting or like wires in the wall, I think is what you said before, or anything that's not going to have a future value to it.
All right. Another question came in, and this one came from Jerry, and it says this: if you have a lesser qualification requirements, meaning more risk, how do your interest rates compare to a typical bank loan?
So with the multi-funding source model that we have, rates are going to fluctuate, right? So each financing company is going to have a different appetite, and with that different appetite of credit, they're going to have a different rates. And I showed you an example with I would say probably an A credit would get a 4% rate for that transaction. Now let's say there was a little bit more hair on that credit, right? It was a little bit more hairy. It was one of those credits that it didn't have all of the best income coming from it and all those things. It could possibly have a higher rate. I'm not going to say we're going to be a loan shark, let's say, but we're going to provide the customer with the rate that their credit's going to allow them to do. So, it could range anywhere from 4% to 10%.
All right. So this follows up nicely with a question that came in from Juan. And Juan wants to know, how do we contact to follow up? How do we get in touch with you? So I can say that everybody on this call is going to get an email from us, and we'll give you contact information for GFS, a flyer, a copy of a case study, et cetera. So we'll send you some information about how to contact GFS. So if we want to make sure that if we have an opportunity and we want to see if we qualify, and if we qualify at what rate it'll be, all we have to do is just call the GFS 1-800 number. That's all somebody has to do, and they can start the conversation or contact a Graybar rep. Would that be the way to do it?
Either way.
Either way.
Either way. You can come directly to us and, ask for a credit application so we can get the approval process rolling, or you can ask more in detailed questions about the types of financing that we offered. And that's one key aspect of what we do. We provide very good service, and I think that please feel free to call our 1-800 number. Obviously, your local sales reps are informed about Graybar Financial Services also, and you can contact them too.
All right. And that brings up a question that I have, and that talks about the equipment. Graybar Electric Company being a distributor, sometimes there's going to be projects that come to us that's going to have more than equipment that comes from Graybar. I mean, integrators and contractors get equipment from multiple different sources. Can we include non-Graybar equipment in a lease?
Oh, definitely. I mean, it's a necessity. If we're going to do 100% project financing, we're going to have to be able to include Graybar equipment, non-Graybar equipment, because we understand. As Graybar employees, we obviously want you to buy all your material through Graybar, but we understand in the majority of the projects that you have, you're going to have to look at other places for equipment also.
Carmelo asked a question, and I hope I pronounced that correctly. Can you please expound on master leases and in what instances they would be used or considered useful?
Well, with the master lease, it's going to be the best aspect of this is going to be the fact that you are going to get approved for an overall dollar amount. upfront. So let's say we're able to get you approved for $500,000, so you know what your credit line is going to be. And you also know that throughout this process, you're going to be able to pull down off that. So let's say you have Project A, and Project A is going to be for $100,000. You can fund Project A and start that $100,000 lease transaction. And then let's say 7 months later, you have Project B that pops up, and it's $150,000. You can then utilize that same credit line and not have to go through the same documentation process, but just sign off on a schedule of payments that would be for Project B. We can do it one of two ways. We can make these separate transactions where they end at separate time frames, or we can make them coterminous so that the transaction can be linked together where, let's say, Project A was a 60-month term and Project B starting 6 months later, they would end at the same time instead of ending at different time frames. Some companies might decide that they want to do that, and that's one of the advantages. Another the advantages is obviously locking in the rate factor for that overall cost of the project.
All right, great. Thank you very much. That's all the questions we have online. If you have one, please type it in. We'll respond. While you're thinking, if you want to add another question, please do that. But I have one more, and that is does Graybar Financial Services have a website where we can go up and get some additional information, and what is it?
Sure, yes. We are underneath graybar.com/GFS.
Okay, so it's graybar.com/GFS.
Correct.
Thank you very much, Jason, for the time that you spent with us today to discuss financing in the data center and also other types of financing for other types of projects. I just wanted to remind everybody that this conversation we had today with Jason is archived. It will be archived by the end of the day up on graybar.com. You can go up there and listen to it again or pass it on to your colleagues if you like to do that. If you have any questions that we didn't answer, go ahead right now and type them in the Q&A box, and we'll respond to them via email. If you were one of the lucky people that were one of the first 50 people to be online with us today and you got that certificate for a cup of coffee, congratulations. Take that off and enjoy a cup of coffee on us today. Again, thank you for the time you spent with us at this G2 Talk webinar about financing in the data center. We look forward to being with you the next time we meet. Thanks for being with us today. Have a great day.